Hello guys, welcome to the 12th video in the Arielfx Beginners Course. In this particular video, we're going to be discussing currency correlation, what it is, and how you can use it to your advantage. So what currency correlation is, really, and in the most simplest term possible, is the way that one currency pair is either inversely correlated or correlated with one another. If it is correlated, one currency pair goes up, the other one should go up as well. If it goes down, it should go down as well. Inverse correlation is when one pair goes up, the other pair should go down, and vice versa. All right, so there are particular currency pairs that have an inverse correlation with one another, and other currency pairs that have a correlative nature with one another. Okay, so let's just give an easy example of an inversely correlated pair. All right, so the dollar index, all right, relative strength of the dollar compared to all the other currencies around the world, and Euro USD, which is up here. All right, Euro USD is weighted about 60% of the dollar, so it has a major impact on the dollar. All right, so when the dollar index rises, Euro USD should push down. That doesn't mean it's going to push down immediately to the exact pip, to the exact time frame, but over a long-term period, when the dollar index rises, Euro USD should fall. When the dollar index falls, Euro USD should rise. Okay, this is because when the dollar index rises, Euro USD, the dollar is strengthening, meaning the euro is weakening, it pushes down. When the dollar index is falling, Euro USD should rise. The euro is stronger than the US dollar. Okay, so let's look at a really quick example before we get into the other inversely correlated pairs and then eventually the correlated pairs. And I'll give you a chart of the correlated and inversely correlated pairs that you can use in your real trading so that you can write it down in your notes and take advantage of it in your personal trading. So let's give a quick example and then I'll get into the other ones. So the dollar index, the DXY. All right, so you can see that we were in, and I'll just go to the weekly time frame here, we are in a massive bullish run right in here, massive bullish run. Subsequently, Euro USD, massive bearish run. All right, I'll just get rid of that first, and we'll get into that in a minute. Massive bearish run. All right, now going to the daily time frame, the dollar index. The dollar index had this huge run to the upside, whilst Euro USD had a massive run to the downside. Dollar index pushed to the downside, corrective nature. Euro USD pushed to the upside, corrective nature. The dollar index came into the last sell to buy, and we'll get into more of the sell to buys and the buy to sells in the advanced course, but for this particular zone, we came into this price point, this last sell to buy candle, to go long. Euro USD came into the last buy to sell candle to go short. All right, so if we scale into the dollar index on the 1 hour time frame, we can potentially see that price can push to the downside a little bit more to then take a long to continue with this bullish momentum trend. Euro USD, we could have a small push to the upside and then a continued short off for its momentumous downward trend. All right, so this is just what I'm looking at currently. It is June 14th, 2020. So we can see that when one pair, or when the dollar index rises, Euro USD should fall. Okay, so that is just a quick example of what an inversely correlated pair does. The dollar index and Euro USD are very inversely correlated. So let me just give you a little table of what you can write down in your notes so that later on you can take advantage of correlation between pairs. All right, so let's go with inversely correlation first. All right, so inverse correlation. All right, these are the pairs that I use that are really inversely correlated and that you can use in your trading as well. All right, so just like the one we went over, let me just make a little bit of space, the DXY and Euro USD. Oil and USD CAD. And I'll give examples of these in a little bit. Euro USD, USD Swiss franc, GBP USD, USD JPY, finally AED USD, and USD CAD. All right, so these pairs are the biggest ones that I look at in terms of inverse correlation. So like I just went over, when the dollar index rises, Euro USD should short off. When oil rises, USD CAD should short off. When Euro USD rises, USD Chef should short off. GBP USD rises, and the same thing. When GBP USD shorts, USD JPY should long. Okay, so these are the inversely correlated pairs that have the most inverse correlation with one another. Okay, these are the ones I look at the most. All right, so that is that for inverse correlation. Let's go to correlative pairs. All right, correlative pairs. Gold and AUD USD. GBP USD and GBP JPY. USD Swiss franc and USD JPY. Finally, Euro NCD and Euro AUD. These are the biggest pairs that have the most correlation between one another. And I'm going to explain why, in particular, some pairs have a correlative nature versus an incorrelative nature. All right, so mark this off in your charts, or really just have these in your notes so that you can pay attention to the way these pairs move in conjunction or the opposite way with one another. All right, so make sure you have those, and we're going to give a couple of examples, real-time examples on the charts so you can see and visualize what I'm talking about here. All right, so we already went over inverse correlation with the DAX and the euro. Let's go over oil and USD CAD. So the reason why oil and USD CAD have an inverse correlation with one another is because the Canadian dollar is a major manufacturer of oil and a major exporter of oil. Okay, so when oil rises, USD CAD should short off, meaning when oil rises, the Canadian dollar should strengthen, okay, pushing USD CAD down, right? When oil falls, Canadian dollar weakens, should push USD CAD up. So it has an inverse correlation with one another. So let's check out an example. All right, let's go to the 1 hour time frame, and we'll just give directional bias. All right, so with this huge, I guess not really huge, but from May, let's just say May 27th to June 7th, we had a big, huge bull run. All right, from here to here, we had a big, huge bull run. So May 27th, let's go to USD CAD. May 27th is in here to June 7th is down here. Had a big bearish run. All right, now we're starting to push up. All right, let's say from June 10th to present day, we have a big bullish run. On oil, June 10th to present, bearish run. Okay, so what we can expect maybe, and this could be a potential setup, if USD CAD maybe can push down a little bit and long, US oil maybe could push up a little bit and short, potentially coming up into this zone. All right, so you can see how price can be inversely correlated with one another. All right, the Canadian dollar is a major exporter, a major manufacturer of oil. So when one rises, the other should fall, and vice versa. Okay, so that's really just a quick example of what I'm looking at for USD CAD and oil. That doesn't mean that this is going to go short. This doesn't mean that this is going to go long. If this ends up shorting all the way down, oil could potentially just continue to rise all the way up. I'm just giving you an example. We can go over another one really quickly of inverse correlation, and that has to do with EU and USHEF. Okay, so we just went over the dollar index and Euro USD, oil, and USD CAD. Now let's do one more inversely correlated pair, and then we'll get into what pairs are correlated with one another. All right, so EU, when we kind of just went over that, EU, we are looking for continued short offs. Okay, now on USD Chef right here, we could be looking for continued longs, and you can see, all right, push to the downside, euro, push to the upside, all right, push to the downside on euro, USD Swiss franc, push to the upside. So what we could see is maybe since we're looking at euro USD to potentially rise up into these levels and then have a continued fall, maybe USD Swiss franc could have a fall into here, into these levels, and then a rise. So you can see how maybe if you have a particular setup on one pair like Euro USD, like I do, but maybe not a particular setup on USD Swiss franc, maybe when Euro USD comes into that level of interest, maybe there'll be a level of interest that USD Chef could come into to make another run to the upside. That would mean Euro USD shorts to the downside. Now let's go over why this is. So USD chef, okay? So I'll just type this up right here, really quickly for you. USD Swiss franc and Euro USD. You can see they're both USD based pairs. So why would they have an inverse correlation? Well, it just has to do with the pair that they're pairing against. So USD comes first here, your USD comes last here. Okay, so this means that when USD chef strengthens, this pushes price up, meaning US dollar strength here would make the euro weaken, would push it down. That's why it's inversely correlated. Right? When the US dollar weakens, pushing price down, Euro USD weakens, Euro strengthens, pushing price up. That's why it's inversely correlated. Okay, so let's get into more of the correlated pairs now. All right, so I'm going to go to this chart here in currency correlation, and one that I came across that I actually use in my personal trading that I think is very important is AUD USD and gold. Now, AUD USD has a positive correlation to gold because both assets, as you can see here, are priced in dollars. Gold XAU USD, AUD USD. Okay, USD comes last in both of these pairs. And the fact that Australia is known for its mining operations. Australia is huge in mining gold, meaning that when there's an abundance of gold, demand for AUD, okay, the Australian dollar, rises. Okay, this is why when gold pushes up, AUD USD pushes up as well. When AUD USD falls, less demand for the Australian dollar, probably less demand for gold. All right, maybe that means in terms of USD strength. So let's just go to AUD USD. And we could potentially be looking for a short opportunity if price gets back up into here. Not really looking for setups in terms of this video, but let's just go into kind of the relative strength between each pair, AUD USD and gold, and give you kind of a directional bias based off of what the charts are looking like. Okay, so let me just get my handy dandy little text tool out. AUD USD and XAU USD. See, both end in dollar. All right, and we know that the Australian dollar is a major manufacturer of, or really mining of gold. So we know that they are going to be correlated with one another heavily. All right, so now let's look at the chart here. Australian dollar. All right, we had a huge rise. We are in a long-term bullish market, but we could see some sell-off because we are seeing the US dollar starting to gain strength, just like we saw in the DXY a few moments ago. Okay, and let's look at gold now. Gold, okay, we are in a big uptrend, okay, just like we are on AUD USD, but we could see some sell-offs. And what I mean by this is what you're going to be seeing in the advanced course. All right, we could see XAU USD push up a little bit higher to take this liquidity, and then have a massive fall to the downside, taking these equal lows, this liquidity as well. That would be in a good alignment with AUD USD pushing up a little bit higher like gold, and then have a continued fall to take this liquidity here. Okay, so I'm not saying that right when AUD USD starts to push up, gold will push up like to the pip or to the time frame, but in the long term, they should be correlated in the long term with one another. So that's very important to notice. All right, so we're looking for a push up to take these equal highs and then fall. Gold, we're looking for a push up to take these equal highs and then fall to take these equal lows. So good correlation there, and this also helps with potential setups. So I have a potential setup on AUD USD. I hope this plays out. If not, then oh well, we move on. But based off of the technicals, this should short off when we get up to this level. Okay, if I have a setup on AUD USD, maybe there could be a potential setup on gold. I will look at that when AUD USD gets into my area of interest. When AUD USD gets into my area of interest, up into here, XAU USD gold could be up in these regions of price to potentially short off just like AUD USD. All right, so heavily correlated. All right, so let's get into one more. All right, Euro NZD and Euro AUD. Let me go to Euro NZD, Euro AUD, Euro NZD. Now, for me, I'm looking at potential long opportunities, but it could also short off because of imbalance fills that we have already come into, which we'll discuss on the advanced course. So you can see that on the 4-hour, and I'll just get into this, we're in a massive bearish run, just like on Euro AUD, massive bearish run. just kind of disregard all the markups. These are from the analysis that I did. But you can see this, the correlation, okay, the sells, Euro AUD, the sells. And look at this, Euro AUD and Euro NZD. I'll just put it up here so you can visualize it. Euro NZD, Euro AUD. Sorry about that, guys. You can see that Euro is the beginning currency in both of these pairs. Euro, Euro. NZD and AUD, all right? NZD, USD, AUD, USD. Or excuse me, New Zealand dollar and Australian dollar, so I'm getting mixed up. New Zealand dollar, Australian dollar, both are from Asia, both are Asian session pairs, so they should be quite correlated with one another. So when the NZD strengthens, usually the Australian dollar strengthens, pushing both of these down. When they weaken, Australian dollar should weaken, should push it up. Same with Euro. When Euro weakens, should push both of these down. When Euro strengthens, should push both of these up. Okay, so they are very correlated with one another. Not 100% correlated, because obviously the charts, you can see this chart here, doesn't look the exact same to this one. But long term, it should have the same kind of direction. So if Euro NZD makes a move to the upside, which I'm expecting, in my opinion, AUD or Euro AUD should make the same move to the upside. We can see that on the 4-hour time frame, I know it's just one candle, but we have a massive bullish candle here. Euro NZD have a massive bullish candle here. I'm not saying that it's going to be the same for each candle, but I'm saying in terms of direction, usually they're very correlated. Okay, and now this could easily fall to the downside because we are still in a bearish market. If this falls to the downside and makes another lower low, Euro AUD could follow suit and push to the downside as well because we're in a bearish market. So use these currency correlations to your advantage. That can be very helpful in determining directional bias and determining not only maybe a potential setup on one pair, but you could have a potential setup on another pair if they are correlated or inversely correlated. So for instance, and to wrap up, let's say maybe Euro USD, okay, you can see USD is last here, USD is first here, inversely correlated. USD Chef, USD JPY, USD is first here, correlated. So if Euro USD, if you have a setup on that, maybe there could be a setup on USD Chef, okay? So if this one wants to go short, which we're looking at, maybe there could be a setup for a long opportunity on USD Chef. So just pay attention to these so you can maybe have a double whammy and maybe profit 2 times over because you understand correlation, all right? And one more thing before we wrap it up here, USD Chef, USD JPY, they're correlated because of US dollar first and because the Swiss franc and the Japanese yen are both safe havens. So when safe havens are strong, meaning they're going to push these 2 pairs down because they're last on the list, meaning USD Chef is last, USD JPY is last. When it strengthens, should push it down. When the safe havens are not in as demand or not demanded as much, it should push it up because USD would probably strengthen over the selected safe haven. Same with USD JPY, then Chef and JPY are safe havens. If they weaken, USD should push up, meaning more demand over the safe haven currencies. So hopefully you understand what currency correlation is and how just by seeing my markups on my charts, the inverse and correlated pairs, you can see how they work, how you can use them to your advantage, and maybe have a double whammy in terms of the setup for both of these or either of these currency pairs. So make sure you have these in your notes. They can be very helpful. There are more out there. If you want to do some research, definitely check it out. But these are the ones that I focus on the most. All right, so I hope you enjoyed this video. Hope you learned a lot, and we'll get ready for the next video. Thank you.